And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. And as David Keene says, good vibes. I like it, David. Welcome to the Market Forecast. Today is Thursday, January the 20th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to be focusing on context, risk management, and infinite patience. Coyote watch this morning. None spotted. Safe morning for Lacey and for me. I don't want to run into any coyotes either. Economic numbers this morning, 7:30, the jobless claims, as always on Thursday, every week comes out. Initial jobless claims were expected to be 220,000. They came out 286,000, a little bit higher than expected, as did the continuing jobless claims. We're looking for 1,580,000. Came out 1,635,000. So not necessarily good news, which always makes me sad. I'm a fan of this country, and I'm a fan of the people of this country, and we all want best for everybody here. Philly Fed actually came out better. They were looking for 20, came out 23.2. Apparently, business doing very well in the city of brotherly love. 9 o'clock this morning, we're looking for existing home sales. 9:30, the nat gas inventories due out, and 10 o'clock, petroleum status. Crude oil inventories due out. As we think about what traders are thinking about, you can't forget about the president's press conference yesterday, which really provided, I didn't think, very much clarity. And from what I'm seeing, most people are agreeing that there wasn't any real clarity on any of the major issues. Build Back Better, Fed voting takeover, Russia, Ukraine response. Almost like he gave Russia a chance to get a toe in to Ukraine, which was not good to see. But just 2 hours we can't get back. In earnings, Netflix is due to announce their earnings after the close today. Some rail companies, Union Pacific and CSS, reporting early today. Not a very long list here yet. We're just getting into the very beginning of earnings season, so we're going to be seeing a lot more of those coming out. Of course, our crude rally has stumbled after the API announced a 1.4 million barrel boost in crude stocks here in the U.S. versus expected 1.4 million barrel draw. The EIA is expecting approximately a 1 million barrel draw, and we're going to have to wait until 9 o'clock, 10 o'clock, I should say, Central Time, to find out what that information is. I'm feeling like a king today. I installed a new throne in my home yesterday. We had to replace one of the toilets, and the old ones were smaller, I guess, and a little older. This one that I put in, it seems like it's huge. Maybe just because we're used to what we're used to, but it's almost like falling out of a boat. This thing is so big. But hey, I did it. I didn't know, no leakage, nothing. Hey, I'm a handyman now. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling. You can subscribe to our YouTube channel so you get notifications when we do go live. A quick look at the VIX, the dollar index, and the 10-year yield this morning. VIX down a little bit here at 23.11. Really kind of holding and grinding higher yesterday as our equities ground to the downside. The dollar index up slightly, 95.58. And the yield on the 10-year actually slightly lower than the close yesterday, 1.82. The trading, Top Step Trading Foundation today. We're talking about trading psychology. I'm not a psychologist. I would never hold myself out to be one. What I bring is my experience in the many trading psychologists that I've had the blessing to meet and to have the opportunity to work with. Dr. Menaker, as you know, is always with us for market therapy. We're going to work on getting that going again this year. He's always got great ideas, great thoughts. Trading psychology is the most important thing in trading that most traders ignore. Matter of fact, if you ask professional traders how important it is, 70% of them are probably going to say it's one of the most important things in trading. When asked if they work on their trading psychology, 10% would probably say yes. Extremely important. Here's the link. If you want to join me, we'll be looking forward to seeing you there. And what else was I going to say? I don't know. That's at 12:30 today, Top Step Trading Foundation. Looking forward to, again, seeing you all there. I got to say good morning to everybody. Chris, good morning. Have an excellent trading day, everyone. An excellent day, everyone. Absolutely. My brother Rick, what's up? Good morning to you. Love you. Merrick. I hear my mom's been watching. Mom, if you're watching, hi. I love you. Shaw, good morning. Brian, Andre, George, Jimmy, Jim, Alfred, Terry, David, good vibes. I was watching something on the Beach Boys, and that song "Good Vibrations" was Brian Wilson it was something that his mom always said to him as he was growing up. Good vibes, and that's when he came up with the inspiration for "Good Vibrations," one of their most popular songs. For some reason, I've been on a Beach Boys kick. Just love them. Frederico, good morning. Manuel Caesar, good morning. Sarah, love the sunrise there. Bill, good morning. Jeff, got me a cup of coffee right here. Three Lions Insight. Janus, Robert, Daniel Foundation has been great. Thanks. Oh, my pleasure. Three Lions. I'm really, really happy that you're getting something out of it. That's the goal. Is there's a lot of folks that know a lot about trading. If there's something that you can take with you from each of those sessions, that's a success for me. Deanna, good news with the Coyotes. Maybe you can shoot one with your camera and post it. Good morning, by the way, of course. Yeah, I don't get the opportunity to get that close to them. I do have a couple of pictures of one of them on my phone. It's pretty far away, but hey, Chris, graduated from the pro account yesterday. Nice job. Congratulations. Remember, dance with the one you brung. Stay with the process. Rational investor, pit trader turned plumber. COVID, what have you done to us? Thank you, Mr. BB, the rational investor. It's good to see you as always. Don't call it a throne. Frederico. Be nice. They keep the practice account open while we wait for the premium funded. We always are very interested in feedback and thoughts, Chris. Tell them. Let them know. Robert S. Sarah? And Nabil installed 3 last weekend. They are a little different than they were 21 years ago when they put them in my house. Like I said, I've looked down at that and I said, I feel like I'm going to fall out of a boat. Al-Haji, good morning. Tova, Jerry is awake. Pascal, Equanimous is trading. Good morning from the North Pole, a.k.a. Lombard. Yeah, it is cold out there today, Equanimous trading. Stephen C., Johnny, Kevin, Chris. Juan, yesterday you had a question from something in Markets and Profile, and I wasn't quite sure how to answer it, so I've decided to read the book once again. I always, like to read trading books several times because there's so much information. They're more like textbooks than they are novels. They are never easy reads, and I'm going to go back and reread that and make sure that I'm as up on all of that information as I can, because Mind Over Markets and Markets Profile have been very important very important books in my life and my career. Bring a life preserver by the new. Now that is funny. I am going to try and put that up, find one and put it up there before my wife gets home, because if once she gets home, it's going to be coming back down. But I'm in for anything funny. Chris, awesome. Glad you're enjoying it. Should be another good session for us today. All right, so been yammering long enough here. We've got about 4 minutes before the crude oil opens. Let's take a look at what's going on in the S&Ps. We have some important information in yesterday's trading. It looks like we are at risk of opening in a late spike. Let's take a look here. Here's the daily. The late spike is a kind of a profile thing, but it offers context, and that's one of the things that we are looking for here on the market forecast and anything that we're looking for as far as trading is concerned. Lacey, don't go down there. Sorry. So yesterday, volume was really just okay. We had higher volume on Tuesday, Wednesday, a little bit lower volume. We did add 27,000 in open interest. So we've had 3 straight days of increasing open interest. Each day has been more open interest coming in. So, with the momentum that we've gained to the downside here, below the 100 session moving average, below weekly kickoff low, we've now put in a lower low. We've been watching these swing lows here. The market seems to be changing market state. In the S&Ps, we had been putting up higher highs and higher lows. The momentum had slowed, that's for sure, since the beginning of the year. Really since the beginning of December. Now we're at I think a greater risk of changing market state. There's so much uncertainty out there. We know that they're going to be raising rates. We know that money's going to get tighter. The market is working on pricing that, and with all the uncertainties, it's having a very difficult job in doing so. Markets don't like uncertainty. There's a lot of uncertainty out there. We also have to remember that they are very resilient. Open interest on the down day equals more shorts, 27,000 approximately. Recent swing lows are in play. We tested down to this swing low yesterday. Just to be exact, that swing low, 45.2025. Yesterday's low, 45.17 quarter, within a few points of it. That was the bottom of the late spike. Take a look at the 30-minute chart. Okay, here's the late spike. I'm looking at the base of the late spike at approximately 45.49. That's when the range started to really accelerate to the downside. We closed near the low, settlement 45.25, 45.24.25. 45, 24, 25. Say that 15 times, 5 times fast. Try that. So this area here, when we leave a late spike like that, the market doesn't have time to show acceptance in the regular trading hours. When we open inside or below the late spike, it can be an indication of the market accepting lower pricing. Again, the base of the late spike we're looking at as 45.24 quarter, 45. Does that seem right? No, I'm sorry, that's not correct. 45.24 quarter is settlement. The base of the late spike, 45.49. If I've been saying something wrong, I do apologize. The base of the late spike, we're calling 45.49. That's when, right at the end of the day, sellers just came in and barreled into this market to close it lower. Didn't have time to accept in regular trading hours. If the market opens again in the late spike or below the late spike, it can mark acceptance in lower pricing. Now, there's an afternoon pullback that I'm finding also very interesting. If the base of the late spike doesn't hold, this afternoon pullback high right here, if you can see it, let me make this really big. Okay, this afternoon pullback high can also be an important inflection level in the day time frame. That's 45.68. 45.68. Write that down. Even if you don't participate today, see if either of these visual levels seem to offer opportunity today. Even if we don't participate, there's much to learn. So context, opening in the late spike might be telling us that we're going to continue to accept lower pricing. Look at the opportunity at weekly kickoff low yesterday, 46.02. The high of the session, regular trading hour, 46.03. 4 ticks through it, and then finding sellers and just continuing to rotate and finishing the day on the low. Love it when a plan comes together. Our plan today, no monitor for continuation to the downside as long as we do not accept back inside value from yesterday. So value low, very close to the base of the late spike. This area, 45, 49, 45, 54, 53, this whole area is going to be pivotal for us today. We don't want to accept back inside value if we are looking for shorts. If we're looking for shorts, we want to reject value yesterday, find resistance at the base of the late spike / value low from yesterday, and look for the opportunity to see the market continue to the downside. The important thing to remember about all of these levels that we're talking about, the base of the late spike, the afternoon pullback high, is it allows us the opportunity to limit risk. Always talking about trade location, and these can be very important and useful trade locations in the right context. Are we in the right context? We very well might be. Let's take a look at the crude oil now as it opens about 2 minutes ago. Our rally has taken a breather at 58 at 85.80 weekly kickoff high. We took a look here. The low from the overnight, 84.73, 7 ticks down below that. There's nothing finite and exact in trading. We lost 5,500 in open interest yesterday. You think maybe when this market kind of had a hard time moving higher, we took a little bit of profits off the table here at this important inflection level? If that's the case, they took some selling power away from the marketplace. Long liquidation takes selling away from the marketplace. Short covering takes buying away from the marketplace. If we did cover some shorts yesterday, and it's indicative by the negative open interest on a down day, we liquidated some longs yesterday. We're waiting on EIA today. We have to remember that. We didn't get it yesterday. API, we came up with a little bit more of a boost than a draw. So the market really kind of hanging here waiting for new information. Here's the 30-minute chart. We are in range. We are in value. We don't really have any overnight inventory with which to talk about. No gaps, no runs, no hits, no errors. We're trading basically right around settlement, which is 85.80. 85.80. $1 above weekly kickoff low. There's our test to weekly kickoff low. Right back into range. The market in longer time frame is out of balance. In short time frame is in balance. I'm going to try and stay patient, wait for new information as the day goes on. It appears with this, this is the 8 o'clock bar. Probably no real important early trades here as we take one little look above the opening range. Opening range is 21 ticks wide. A little rich for my blood. And the fact that we've opened in range and in value, it just tells me stay patient, stay cool, Hogue, wait for something as the day goes on. Maybe some information will be helpful for us with the EIA. That again at 10 a.m. Central today. Let's look at the Nasdaq, which has been kind of foreshadowing the change in market state. We've had lower highs and lower lows. We seem to be continuing that. We lost open interest on the way down, but the Nasdaq, which has been presenting as weaker, probably didn't come in with new selling yesterday. Although we did move lower, we lost 400 in open interest. That's an estimate. Again, kind of hard to read. Volume maintained on the way down. We didn't really get any huge volume on this move to the downside. You can see when we think about the auction process, we want to see volume continuing to increase at lower levels to decide if this auction is doing well. Remember, there's tons of uncertainties out there. And in the back of my head, I'm always remembering how resilient these markets are. So gives me a little bit of cognitive dissonance from time to time. However, we have a similar situation in the Nasdaq as we had in the E-mini S&Ps. We have a late spike. We have settlement down here, 15,033.5. We've got some overnight longs. Okay, our short time frame, weaker hands traders have been accumulating longs throughout the evening. We've got a little bit of a different situation here in the fact that we are going to be opening in range and in value, and looking like we're going to be opening above the late spike. That's rejection of lower pricing. So we're getting kind of contrary information, which does sometimes happen in the S&Ps and in the Nasdaq. The afternoon pullback high that we were talking about is right here. Okay, this is that afternoon pullback high. I'm just going to 15,216, really the high of that afternoon pullback high. And it's not a very strong high. We have two 30-minute bars that trade basically to the same place. It's more of a mechanical level, likely to be revisited. So base of the late spike, 15,103. 15,103. More like 15,130. I think I dyslexized that. 15,130 is the base of the late spike. The afternoon pullback high, 15,216. That one I wrote down correctly. In range and in value, try and stay patient. A little bit of a different story. Remember, the Nasdaq has been presenting weaker. It's actually presenting as less weak right now. We did add a lot of new shorts in the S&Ps yesterday. What does that mean? Gold, we talked about yesterday, the fact that we had this bull flag. We broke out above it right on the open or right after the open. We traded right to weekly kickoff. We stopped there, looked around, and we just continued this move to the upside. We added 17,000 in open interest on pretty much the highest volume we've seen for quite some time. We'd still have plenty of space above. Even if we're going to be looking at this trend line, we've got plenty of room up to, let's call it 1856, 57, and just kind of looking at that space above. We good volume, good open interest increase, continuing to move to the upside. Now, what's it look like on the 30-minute chart? We opened in range and value. This is what the gold does. You get the big move, and if you don't catch it, you're dead in the water because it just does this the rest of the day and the rest of the evening. We ended up with a little bit of overnight shorts in this market, and we did leave the opening range at the low of the session. Why would I consider an opening range trade in range and in value? Because the market has changed market state to one degree. It's still putting in higher highs and higher lows, but this is a kind of an acceleration to the upside. So the market is in longer time frame, medium time frame, I'd have to say, out of balance, opening in balance in the day time frame, leaving the opening range at the low of the session, offered an opportunity for another upside. We had the opening range at the low of the session yesterday. We got the opening range at the low of the session today. Don't know how far it's going to go, but at least it offers us that opportunity to limit risk and give us some direction early in the session. When the opening range is at the low of the session, buyers are in control right from the beginning. How long they maintain control is unknown. So that opening range low is 1839.80. If we get back down there, there may be opportunity there in either direction. All right. Take a look now at the euro. Well, we had a breakout above that weekly kickoff. What was high last week is now weekly kickoff low, and now we are back testing it. Excuse me. Weekly now kind of presenting as resistant at least yesterday. If you remember, we had a repair day yesterday. That repair day is now over. Volume slow yesterday. Open interest lost 1,400 in open interest. Take a look at the repair day. We can probably see it even better on the TPO charts. Okay, here's what a repair day is. The market double distribution trend day on Tuesday. Yesterday, we opened in the middle where there's very little time and volume spent, and the market spent the day kind of repairing from, well, it didn't even get to either point of control. Very narrow range yesterday. Still looking like we're in that repair area. We don't really have a lot of change in this market. Here's the 30-minute chart again. So here's that repair day. Here's weekly kickoff low, which is presenting as resistance, at least for now. Taking a look a little deeper into this, we don't really have any overnight inventory. We didn't really have much when the market opened. We opened in range and value, so I'm going to try and be patient, let the market establish its early range, its initial balance, the first hour of trade, and I'm going to focus on that. If we did that yesterday, here's the low and here's the high for the first hour. We pretty much were able to manage risk pretty well if we even thought about trading this yesterday. This is a non-trend day, a day that we would say, all right, this is not a good day. It's too narrow. There's not a lot of opportunity. We're going to have to be very precise with our risk. Perhaps there's better opportunity in something else. And we're still there. We're still, right at settlement, not looking for too much here in the euro. And the 10-year. Looks like we got some nervous shorts in this market. We've come a long way in a short time. We've got a long way to go and a short time to get there. We'll watch old bandit run. We were kind of looking for a pullback in this market to help even out some of the inventory. We lost 1,400 of that inventory yesterday. We lost 8,800 of open interest yesterday on this relatively balancing, almost a doji, non-directional, non-decisive day. I'm still looking at this market as a market that I want to sell strength. We are still out of balance in the medium time frame. Take a look at the 30. Okay, we had the gap. We opened with the gap. We minded the gap. If we're looking for opportunities and we can't close the gap relatively early, we look for opportunities in the direction of the gap. It was a very difficult opening here this morning. Didn't see that there was any real, important levels other than this previous naked point of control here. We've opened with a gap. That gap is going to remain, at least for now. It may be an upside structure that we recheck when the market does turn back to the upside. I don't want to fight this move to the downside. Remember, we're in a market that, this is not the right chart. Damn it. I hate that when that happens. Here's the 10-year. Okay, it looked like something was wrong. That would be the natural gas. Moving to the downside, range bound yesterday, no real overnight inventory, no gap, attempting to find acceptance or rejection of value over the last couple of days. Now we're in the right spot here. No real overnight inventory. It's a question of accepting or rejecting value. I don't want to if I'm going to be looking for longs in this market, I want very precise profit targets, if you will. And and I want not to be in longs for very long. The market structure, the market state is saying that there's more room to the downside. We needed a little bit of a pullback to readjust inventory. I believe we're in that pullback. I'm still looking at this as a market that I want to sell strength. We've got a naked point of control up here that would be wonderful. That would also close this gap. We don't want to leave all this unfinished business above if we want this market to continue to move to the downside. We always do leave unfinished business in either direction. And we wouldn't mind if we were able to take care of that today and start looking for opportunities to sell strength. Now we can go on to the nat gas. Sheesh. Here's the daily. So big move up, big move back down. 2 days, 3 days in balance. Yesterday, we pushed price back into the previous area of balance. Doesn't look too exciting. It's a bit of a roller coaster, and no matter what the heat is saying, no matter what this is saying, my heating bill is 1.5 times what it was last year. So the fact that we were unable to maintain higher pricing and lost 4,700 in open interest yesterday, I think we trapped a whole bunch of longs here yesterday. They capitulated. We had some pretty serious losses that occurred in any time frame yesterday. They're going to be licking their wounds. I'm not thinking that we're going to have a big opportunity today, but the market is opening with a gap and continuing with that gap. We also, I believe, have a bit of a late spike on this 30-minute chart. Here is that late spike. Boom. Settled near the low, $4.03. And we've opened with a gap below a late spike. The market is likely, if it can't accept back above that late spike, is going to be accepting lower pricing, which is exactly what this market is doing. Looks like we're going to be picking up and cleaning up some past information. We got a couple of naked points of control down here that are, of course, what are they? They are visual information, visuals. So I don't want to fight this move to the downside, and I don't necessarily think that there's enough energy in this market, if you'll pardon the pun, to join this move to the downside. Now, I've been wrong before. Believe me, I've been wrong a lot. We're going to have to see how things play out. All right. I think some few questions here. Deanna, good. I'm glad you're liking the foundations classes. Watching them live on the recordings is great. It's called a donut. I ate that already. Chris, what day was it? In Trading Foundations 101, first week, the third day, we went through the trading platform. Come to group coaching Monday. It's probably going to start around 1:30 with foundation. We had to start it a little bit later. But come to group coaching, and I can go piece by piece and answer any questions you have, Chris. Here is the link for any of you that want to join group coaching, and that's Monday around 1:30. I know there's some settings on how to set up the market profile, all of those things. Let me know. Be happy to help. Probably the best place for us to do that again would be group coaching. Getting a little bit close to the E-mini open. We got 10 minutes here. Equanimous. Yeah, the opening range indicator and settings that I'm looking at are It's a Tiki tool. You go to free indicators, download the Tiki opening range, and then you've got to set it towards the minute you want it to start, and then how long you want it. You want 0.1. That's going to be just that first minute of trade. Save it, and then put it on a 1 minute chart. You'll be able to see that first minute. If you still have questions, again, come to group coaching. Those are easy ones that I can show you piece by piece how to add them. Devant, is your ES chart going to 3 p.m. CT only and not 4 p.m.? The last hour yesterday between 3 and 4 really changes the value area. I do, because I'm collecting regular trading hour information. Now I have different platforms and different profiles that I do add that time to, but because the market is closing in essence at 3 o'clock when New York closes, that's why I have that closing out at 3 o'clock. And yeah, when there is some significant volume after 3 o'clock, you can certainly change your value area. Is it better or worse than the one I'm using? Only if it works better, or only if it works worse. Main points: how is the front month of contract of gold calculated? It's a good question. It's going to be rolling, and it's going to roll into April. There's a couple of they call them bastard contracts where they don't get traded very much. So when when we start losing volume in the Feb, and we'll be watching that with everybody here on the forecast. We'll let you know. I think it's the week after next that we're going to be probably rolling Feb into April gold. April is J. But how is it calculated? The front month is always the highest volume. And we'll be talking about that. Morning star candlestick pattern forming on the daily, and thinking, not sure what market that was, Robert. I'm sorry I didn't catch that in real time. Rational exact beach ball looking uppy up here. Milan, can we meet in person? You're going to be coming to Chicago soon? Is the Nasdaq not considered a gap? No, it's inside the regular trading hour range from yesterday. So when we're looking at day time frame gaps, if the market opens outside of the previous day's range, that creates a gap. That's a good idea, Sean. Quantumus, and for NG, what do you use for 30-minute volume profile hours? Natural gas. I'm treating it like the crude oil, 8 o'clock till 1:30. Sometimes there's some pretty decent volume in that 7:30 bar, but I'm trying to be consistent with that, and consistency is key. Sean, that's a great idea. What's the difference between opening in range and out of range as to opening with the gaps? Great idea. Well, Milan, let me know, if you're going to be in Chicago. Let's see if I can make arrangements to meet up. Jeff, have a great day. We're all going to go here. Take your deep breath. Stay humble, grateful, and creative in your trading. See you in the proverbial pit in about 2 minutes. Have a great trading day. Looking forward to trading foundations today. Again, that's trading psychology, and tomorrow's Friday, so the next time, if I don't see you this afternoon, tomorrow will be it. You should see Dan for the market recap today. Get out there and profit, trade well today. Be careful, and get some good trade locations. Take some profit.